In this video, Tesla stock surges again, yet still remains dirt cheap according to Tesla bulls and Tesla stock analysts, and Elon Musk once again hints at the gigantic future potential of Tesla. First up, Tesla stock today surging once again up over 7%, more than $50 per share. Over the last 5 trading days, that means Tesla stock up about 16%, over $100 per share. But to put things in perspective, over the last 1 month, Tesla stock's still down dramatically. A peak closing price of $952 per share and a low closing price of $628 per share in the span of just a few weeks, down over 30%. Tesla's rebounded very sharply in the last few trading days, up 21%. But to put things in further perspective, still a very long way off the recent highs over the last 6 months. We can see Tesla stock peaking almost $1,200 per share, still down over 30% from that point. And if we go back a little bit further, Tesla stock at practically $1,200 per share closing price, still down almost 40% from these levels, which, by the way, just for the record, at $1,200 per share, less than 6 months ago, Tesla stock still, in my opinion, was the bargain of the century, which means, yeah, it's even more a bargain of the century. I don't know, what is that, bargain of the millennium? Something like that. Of course, it was a sea of green in the stock market today. The Nasdaq 100 up over 3%, Amazon up over 3%, Apple up over 4%, Rivian stock up over 6%. In the last 1 year, Rivian stock down a mere 82% since its November 2021 peak, and I still wouldn't be going anywhere near that company or stock. Don't get me wrong, I wish them well. The more the stock gets crushed, the cheaper it looks, but I'd still rather not be betting on somebody, or in this case a company, scaling Mount Everest blindfolded with no water or food in their underwear. And they might do it, but I'm not going to be betting on it. Lucid up almost 5% today. ARK's flagship ETF, the ARK ETF, up over 6%. So let's get into the rest of the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. Here we are over on Twitter. Another great tweet here from Gary Black, who you should all be following. At $720, close enough to where we closed today, Tesla stock now selling at 36 times 2023 adjusted EPS of $20 a share, the lowest forward PE since peak COVID in May 2020. Normal Tesla 1 year forward PE is around 80 times. One more time, 36 times today, usually around 80 times. We forecast 2022 to 2026 Tesla volume and EPS growth 45 to 50%. We can't read between the lines here. What Gary is saying effectively is that Tesla stock is approximately half price based on these estimates. Feel free to pause the video and have a look at these in more detail. I know I've been repeating myself a lot in the last few months, but I do want to say one more time, Tesla stock today, to me, the best risk-adjusted opportunity that I'm able to find in the stock market by light years. I still cannot believe that just a few days ago Tesla stock was available in the low $600 range. Now today around the mid $700 range. It's an absolute joke. It's farcical, in my opinion. Don't say I didn't warn you for the 420th time in the last few months. In fact, even stock analysts who are slashing their Tesla stock price targets still remain extremely bullish on the company, and yes, believe it is still massively undervalued, and I think that these analysts are massively underestimating where Tesla should actually be. In either case, if they're right, Tesla stock has a long way to go from here, and if I'm right, it has even further to go. Of course, we could all be wrong, but I doubt it. Elon Musk seems to think Tesla has a huge amount of future potential as well. Elon Musk over on Twitter this morning, quote, "Long-term potential of Tesla is high. That makes two of us." Wait, did I say that out loud? No. That guy with 3 first names quoting this tweet once again, gigantic understatement. Even if we ignore everything but EVs, full self-driving, and the Tesla bot, things get super ridiculous. Why? This is an important equation for Tesla stock investors to understand. EV fleet multiplied by monthly FSD subscriptions plus the bot fleet multiplied by monthly AGI subscriptions equals stupid. Just plain stupid. And Elon Musk responding to this, true. Let's read the rest of this thread. Of course, the only reason such stupid revenue and profits will be possible is by having an inordinate positive impact on the world, Create value, reap rewards. Shout out to yesterday's second video. Full self-driving changes everything, and Tesla Bot will be orders of magnitude more important and transformative long term. I privately modeled Tesla out into the distant future, but there's no point sharing these estimates due to the extreme level of uncertainty. For the record, I go all the way out till 2069. Seriously. The importance of EV fleet size plus bot fleet size can't be overstated. The further into the future, the larger the fleets, the more insane the numbers. Most investors do not seem to understand this. Tesla has not realized even 0.1% of their future potential. And I really mean this. I did not pull this number out of my ass. I thought about it. Maybe you should think about it if I'm right. What does that mean for the future of Tesla? Get it? Everyone keeps reasoning by analogy, assuming Tesla cannot sustain insane levels of revenue and earnings growth for more than a few years. This is a mistake. It is a huge mistake for investors not to at least ask, what if, and model the implications. What if autonomy is solved? What if Tesla's EV fleet exceeds 100 million vehicles? Then 200 million, and by the way, just a quick moment here, at some point it's inevitable that Tesla's vehicle fleet reaches this level. Do the math. Let's just say that Tesla reaches their goal of producing 20 million vehicles per year at any point in the future. Who cares what year it is? In half a decade, Tesla produces 100 million Tesla vehicles. Maybe 1% of them end up scrapped because they're in accidents and so on, but the rest of those vehicles will still be on roads operating, and that's just 5 years of production once they reach that 20 million vehicle per year level. There's somewhere around 2 billion vehicles on roads today on planet Earth. It's a gigantic fucking market. Just imagine a point in the distant future where Tesla vehicles represent just 10% of vehicles on roads on planet Earth. That's a 200 million vehicle fleet right there. If you're a Tesla stock investor, seriously, take the time and do the math. Okay, 200 million times how many people are paying for full self-driving per month? How much per month? Oh, that's a lot of revenue and profits. What if Tesla's bot works? What if bot expands the global economy by 2 times, or 5 times, or 10 times, or 50 times? What if Tesla solves artificial general intelligence? For the record, my Tesla stock price targets, which are available exclusively on Patreon, check the card in the corner or the link in the pinned comment to join if you don't already have access, which run out to 2032, do include FSD revenue and Tesla AGI revenue from Tesla Bot. However, the impact that these have by 2032, minimal at best compared to what things look like over the next 10, 20 plus years. As I mentioned, the level of uncertainty here beyond 2032 is just too unclear. There's no point in me sharing those estimates, but I'm telling you guys and girls, do the exercise yourself. Model things out. Just see what happens if Tesla's EV fleet with FSD subscriptions, and don't forget Tesla insurance as well, plus Tesla's bot fleet continue to expand by millions, tens of millions per year. It really gets completely fucking ridiculous. Let's head over to the latest note from Jefferies, who've slashed their Tesla stock price target yet still remain very bullish on the company. When it rains, it pours. Price target down, earnings up. This latest note from Jefferies here, a buy rating on Tesla stock, a new revised price target of $1,050 per share, down from $1,250 per share. That being said, the upside price target, $1,300 per share, and the downside price target $600. EPS estimates for 2022, $9.45 a share, way too low. 2023, $15.07 per share, way too low. And 2024, $17.79 per share, embarrassingly low. But anyway, let's not be too hard on Jefferies here. Let's see what they have to say and the reasons why they've revised their price target down yet increased their estimates for earnings. This is a little bit unusual. Key takeaway: long-held fears of disruption from inside have come true, raising Tesla's risk profile while operating performance continues to set transformative new standards of returns and resource efficiency. Take a moment to let that sentence sink in. We cut our price target to $10.50 per share whilst trimming 2022 and raising 3-year cumulative estimates by 14%, adjusting estimates, volume down, and earnings flat. As visibility on China production starts to improve, we've updated our estimates to take a preliminary Q2 view. We cut 2022 volume by 85,000 units, down 5% to 1.415 million vehicles delivered for the full year, which still represents 52% annual unit growth. Skipping ahead a little, our estimates factor Q4 Shanghai running at an annualized rate of 950,000 units. I think this is a little under, with modest outputs of 50,000 and 75,000 from Austin and Berlin respectively. I also think these are a little on the low side. We last published estimates before Q1 results, and after adjusting for higher average selling prices, better OPEX leverage and lost volume, we cut revenue and gross auto profit 5%, with gross automotive margins of 28.5%. Jefferies forecasting 257,000 units delivered in Q2. This is probably not too far off the mark. My own estimates are almost identical to this, to be honest. Working on an update for my Tesla valuation model, including delivery estimates, which drops on Patreon pretty soon, so stay tuned for those. My work in progress updates, base case here, have 258,613 deliveries deliveries for Q2. Shanghai shutdowns caused a huge loss in volume, but this is a temporary blip. Enemy inside and Tesla bigger than Musk is how we have for years framed the risks from Tesla's unconventional leadership and weak governance. It is hard to isolate factors behind the recent correction, from Nasdaq to Twitter financial commitments and China lockdowns, but we are clearly witnessing an uncomfortable pileup of negative news, from ratings to polarizing political opinions and ethical questions. Just want to take a moment here. Notice, while hard to isolate, factors responsible for Tesla's recent collapse, as in Tesla's stock, all seem to be 1, irrelevant, and 2, completely temporary. The wider stock market correcting has nothing to do with Tesla. The futile fascist lockdowns in Shanghai also short term, no impact on the long-term thesis whatsoever, doesn't change Tesla's lead, doesn't change anything about EV adoption at all. Again, temporary and completely irrelevant to the long-term thesis. Elon sharing political opinions on Twitter, also absolutely nothing to do with Tesla, their execution, their lead, or anything. Same too with the false allegations that conveniently appear 24 hours after Elon Musk says he'll no longer be voting Democrat. What a surprise. Point is, Tesla stock's been getting crushed as a result of things that have nothing whatsoever to do with the long-term thesis. They're all temporary blips on the radar. The low-filter communication style can be unsettling for some people, although we find it usually helpful as Mr. Musk freely shares what's on his mind and implications for Tesla. Great point. From raw material shortages to manufacturing challenges or future automation. We also note that the loss of key executives and the head of manufacturing did not stop Tesla going from strength to strength. Exceptional fundamentals. Delivery times stretching from 4 to 6 months do not stand out these days, but a circa 50% compound annual growth rate and 2021 to 2023 capex guided flat should generate post-tax return on invested capital of greater than 60%, which really is exceptional. Factoring in negative working capital adding to free cash flow generation, Tesla is set to continue generating free cash flow faster than it can build physical product and capacity. Tough problem to have. With cash expected to be deployed into higher battery vertical integration and or captive financing to support affordability. Tesla continues to challenge the industry's business model at multiple levels by avoiding resource and capital intensive complexity. Great point. The trillion-dollar question is, how far can Tesla take model concentration, and how many models are needed to take global share to 5 or 15%? Regarding the valuation, price target reduced to $10.50 from $12.50 per share for Tesla stock, we continue to value Tesla as a hardware business. We reduce our price target again to reflect heightened governance risk. My life. And challenging market valuation drivers, discount rate, aka the current macro environment. Just want to take a quick look here. We've got revenue estimates in 2022, Tesla doing about $84.5 billion, 23, $121 billion, and 24, $142 billion. And just touching on the different scenarios here, the base case, the new 1050 price target. First point here, Tesla is the only OEM durably engaged in an EV volume positive sum game, and one of the few OEMs set to grow earnings and return on invested capital from 2022 to 2024. We expect 5-year compound annual revenue growth approaching 50%, forecasting gross automotive margins excluding ZEV credits of greater than 28% by 2022 despite weak Q3 versus 21% in 2020. Interestingly, the 1050 per share price target for Tesla stock here includes peak margins of 20% by 2025. Terminal growth of 3%. Yeah, right. The slightly more reasonable sounding upside scenario includes breakthroughs in battery tech and cost improving gross margin past 30% and delivers 20+% EBIT margin. Acceleration of free cash flow generation through improved working capital or downward revision in capex. Acceleration of growth as legacy OEMs consolidate / shrink, aka go bankrupt, merge, get acquired, etc. Shrink and faster self-funded entry into non-automotive markets. Investment thesis and where we differ. First point here, acceleration of Tesla's operating performance gives us confidence that the gap with legacy OEMs is widening rather than closing. So much for the competition coming. Tesla remains capacity constrained. Looking into 2022 to 23, we see more global battery electric vehicle demand, materially more battery and assembly capacity, a broader and mixer creative model lineup, and still no legacy issues to contend with. Tesla is the only OEM where EVs are not a volume zero-sum game or negative margin trade-off. Again, this is because Tesla is a pure EV company. They don't have any of the legacy overhang, no investments in equipment, technology, engineers for the internal combustion engine. They don't have the dealership model. There's a million things working in Tesla's favor. They don't have any of the negative drags that any OEMs have. Pretty hard to compete with a company that doesn't have the same burden burdens as you, and has better leadership and better engineers and better technology and an unassailable lead and 15 years of experience doing the stuff you're just learning now. I could keep going on. You guys get the point. So I hope you guys and girls have enjoyed the video. Again, Elon Musk and I are both relatively confident that Tesla is just getting started. Even the analysts slashing their Tesla stock price targets are doing so while simultaneously increasing earnings estimates, and Gary the Goat Black still banging the drum on Tesla stock, the absurd valuation, and the fact that Tesla stock today, as I record this, is effectively half price. I mean, literally, Gary Black with a $1,500 per share price target. Not that far off my own base case for Tesla stock. Again, you can find those price targets exclusively on Patreon. And a quick heads up, in the next few days, maybe a week at most, major, and I mean major changes coming to my Tesla price targets and valuation model, so stay tuned for those. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.